Yeah, it's an interesting model because basically you can look at it as a food retailer or you can look at it as a franchising type model. Some of the stores have been struggling from a credit point of view, which is interesting to me because it again notes that it's tough out there even in a business environment to obtain credit and credit lines. So as such, the parent company has been helping out where they see fit and where they can. But nice model, really good model. It doesn't look cheap at its current prices. I must be honest, somewhere, and I saw analyst ratings on it. They've got it mostly as a hold and then a couple of sells simply because of the levels and the valuations. But overall, I like the company, good company.
Okay, well, some of the concerns raised by the CEO in delivering the results is expectation of electricity hikes and what that's going to do in terms of adding to costs, especially within their distribution center where they have huge refrigeration facilities. And then obviously how those costs are added onto the retail price of food, and then the broader impact on whether or not customers will be coming to Spar or moving to lower end food retailers. The outlook?
Well, I guess everyone's straddled with the same problem, aren't they? And Tito Mboweni has been warning of this for an absolute age now, and that's perhaps why he wasn't more aggressive with rates this time last year and at the beginning of this year, simply because he knew that there was a pending Eskom price hike, and every single company reporting now is basically taking into consideration what that impact is going to have on earnings, because ultimately it needs to follow through to the consumer by some way or another. And I suspect obviously higher prices from everything from meat through to ice cream, anything that's refrigerated and requires an enormous amount of power in order to keep it cool.
All right, so that's Spar. The results, margins at 3.6%, and the company is gaining market share against other food retailers. Let's talk about Mr. Price. Sales 11% stronger, headlines earnings per share up 15%. The interim results released. What is the business model here that's working? We know that they are regarded as an affordable option in a situation where the recession has really impeded on people's ability to shop higher end. So they're in a good space.
In a word, value, absolutely. I think you're dead right there. And they're operating in a space where the consumer right now is looking for value, is looking to shop down from higher end. I think a really well managed outfit. And they've gained market share extraordinarily over the last even half a decade or so. And I think they had some ambitious plans a couple of years ago, and people looked at it and said, well, it does look a little bit too stretched, but I think they're going to reach those plans. And I think in part for me this company is attracting the segment of the population of South Africa that's growing the quickest.
Yeah.
So I think they're really well spaced. But again, the stock doesn't look overly cheap for me at these
Growing
levels.
the quickest is the burgeoning middle class, the black diamonds. But there's two streams here to Mr. Price. There's the apparel business, which has been doing well, and then there's the homeware business that they moved into, which apparently is not really feeding into the system particularly well. Why is that?
Well, probably because, over the last 3 years when they've launched it, all furniture sales, you'll probably, if you went and had a look at any of the furniture retailers, you found that they're probably doing badly. But great concepts, nice warehouse type feel when you walk into...
Cash model.
Exactly, a cash model. So I think ultimately they will gain market share over some of and it's quite a competitive space. And if they can offer great value, and it's got a great brand, it's not as if people say, oh, well, Mr. Price, the quality is poor. Okay. You know what you get, so good value for money.
Okay, let's talk about currencies and commodities. Gold at an all-time high, almost hitting $1,120 an ounce. Meantime, the US dollar at a 15-month low.
Yeah, I think you've got to take gold and say, well, what is its industrial usages? Very little. So I think people often use it as a historical hedge against inflation, which people are worried is coming a little bit down the line, and almost the anti-dollar, if you will. So when people sell down the dollar, interestingly, in rand terms, we're still quite away from our March highs, which is somewhere around 10,000 rands an ounce. So we're about 20% away from there, perhaps a little bit less. I'm all for a higher gold price, because obviously that'll help out our more marginal gold mines who are really trying to make a fist of it at the moment, but have been struggling.
Right.
The most interesting thing I saw about gold yesterday specifically was a wanton will of the Chinese authorities to be able to float it in their market specifically, because as far as I could understand it, the Chinese were users of around 60%, or in that region, traders of about 60% of gold physical. So I'm talking everywhere from India through to Eastern China. But interestingly, most of it was traded still in London and New York. And if you want to get your gold, there's going to be a depository at the Hong Kong International Airport, Lerato.
Well, thanks for that heads up. Oil at $77. We know that oil is an indicator of the extent to which there's industrial recovery globally. So when we see prices retreating somewhat, modestly though, it raises concerns.
I'm more worried about the supply side in the next half a decade. To be perfectly honest, nobody's been spending on trying to find oil deposits, and all the ones that are being found are exceptionally deep under the sea, or all the easy oil has been found, let me just say. There might be places specifically on our continent where there'll be easier oil, and the Chinese have expressed an interest in some more recent finds by the likes of Talo in Uganda, exactly. So I think you're right. It's a measure of where we are in a global context. Right. But like I said to you, I'm more worried that nobody has done any real exploration over the last 18 months or so, and I'm worried we might get another supply shock down the line.
Okay, the controversies in business and corporate news. Well, Eskom remains tight-lipped. I quite like somebody saying, it seems to be a load shedding of communications. We're still in the dark regarding what's going on at Eskom. But indications are that the board has actually turned on the CEO. What's going on in that space, do you think?
I suspect it's almost a boardroom coup here. Whether or not, I suspect maybe there was a verbal communication from Marocha himself to the board that he would make a resignation.
He said apparently what had happened is there was a standoff between himself and the former chairperson, Bobby Gotzel. And he said to the board, if he stays, I go. Which Bobby Gotzel says, and if you keep him, I go. I'm not working with this person. Okay, that's the rumor mill. So when Bobby Gotzel initially made the announcement that he'd resigned, the assumption was that they had accepted this verbal threat. Marocha says, I made a verbal threat, I did not write down a resignation letter, so it's not binding. But apparently they're saying that verbal resignation is binding.
Isn't it ultimately a credibility thing? So I think the rest of the board recognizes that and said, well, you can't say something in the heat of the moment and not follow through on your actions. So I think what they're doing, and interestingly, there's a legal aspect here, because if they do recognize him as chief executive, there might be cost implications if he were to be dismissed, i.e. a much bigger package somewhere down the line. And I just think that the South African consumer would find that hard to suck up. So I think what they're trying to do is play that card that says, you said you would resign, so we're waiting for your resignation letter, and in the meantime, you're not welcome here, because as far as I hear, he's basically been locked out.
Yeah. Okay, well, we'll get more clarity on that story later on as we speak to Fakey Mentor. And then PPC Cement admitting to their part in a market share collusion. It's not a price fixing issue, this one. It's just about being very selective in terms of business practices to really capture market share. Explain that to us.
I think what they said to the likes of NPC, Natal Portland Cement, your part of the world, Lerato. They said, we're not going to go down there from the Highveld. We're going to keep, and equally they said to Lafarge in Botswana, we're not going to go there. So I think, like you said, I think they've tried to stress and make it clear, PPC, that this is not a price fixing type operation. Interestingly, a lot of these collusions and competitions authorities investigations are almost a throwback to the apartheid era, where we lived in a very closed society, and the mindset was, well, because I can't do business beyond these borders, I have to somehow find a way to find a good
okay,
price.
Okay,